Prime Minister Anthony Albanese has announced flights to evacuate Australians from Israel. The level of household income used to pay mortgages hits a record high, and the chair of Qantas falls on his sword. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Thursday, the 12th of October, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up with Scott Langford, who is the Group CEO of St George Community Housing.
Yes, it's all about the affordability housing crisis. What St George Community Housing does is works with governments, including local councils, big investors, super funds, people who manage money, that type of crowd, and tries to work through ways to create more housing. They've got a couple of big projects already. Of course, they can find tenants. Unfortunately, there are plenty of tenants needing more affordable housing at the moment. We talk about how they do it and just the fact why right now affordable housing is more of a crisis than ever before. Well worth a listen, this one.
Yeah, it certainly is. It's a national crisis, isn't it? And they're a good supporter of the podcast. It is well worth a listen to this interview. It's coming up later on. The main story, though, this morning, Sean, the government will offer flights out of Israel from Friday for Australian citizens, providing a safe alternative for the more than 10,000 citizens living or holidaying there.
Prime Minister Anthony Albanese announced the decision yesterday afternoon after the government had spoken to Qantas and Virgin and asked for help if repatriation is necessary. At least 2 flights, I believe they're Qantas flights, have been organised, and people wanting to be repatriated need to get in touch with the embassy in Israel. The Prime Minister was scheduled to meet Jewish leaders in Melbourne yesterday. This is happening as tempers locally fray. Pro-Palestinian protests have been held in Sydney and Melbourne, not so peacefully in Sydney. They have drawn criticism as well. Some state parliamentarians have refused to support Israel. The Greens have taken a markedly different view on what's going on to the Conservatives, the coalition party at the federal level. And opposition leader Peter Dutton has been critical of the Prime Minister for not calling a national security meeting, something that the Prime Minister says is politicising the issue. The bottom line to all this is a human tragedy, but some of the behaviour locally isn't great.
Yeah, what is the latest in the Middle East?
Israel's hit back hard at Gaza City after the weekend's invasion by Hamas. Of course, remember that was Hamas's incursion into Israeli territory. It killed hundreds of people. Citizens from many nations, including an Australian woman, have been confirmed killed in that attack over the weekend. Now, more recently, over the last 24 hours, the Israeli bombardment has destroyed shopping malls, restaurants, residential buildings, and offices belonging to aid groups and international media. Hundreds of Palestinians have been reported killed. It's probably in the thousands, while many more are injured and or homeless. The US has sent armaments to support Israel, while the country has called up 360,000 reservists to fight in the war. That's the largest mobilisation since the 1973 Yom Kippur War.
And just before we leave international stories, Sean, Australian-Chinese journalist Cheng Lei is back in Melbourne after 3 years of detention in China.
She was formally arrested in February 2021 over suspicion of illegally supplying state secrets overseas. The Prime Minister yesterday afternoon said the matter had concluded through legal processes. However it occurred, it's great she's been freed.
Yeah, certainly is. All right, local markets, how did they perform yesterday?
Well, the S&P ASX 200 closed up 0.7% to 7,088 points. That's 5 strong sessions in a row. Pretty good. Technology stocks, consumer discretionary and industrials led the way. BHP, Fortescue Metals Group and Rio were all up around 1.5%. Banks were a bit mixed. National Australia Bank and ANZ were higher. Commonwealth Bank and Westpac were lower. Macquarie Group, Transurban, Aristocrat Leisure and QBE all rose by more than 1%. The laggards included CSL, Woolies and REA.
And what about international markets?
There were reports out of China yesterday that Beijing is considering a stimulus package for the economy, particularly to boost infrastructure spending. Now, that pushed up the price of iron ore futures, and we saw that on the ASX with BHP, Rio and Fortescue Metals share prices all rising. In the US, more Federal Reserve members seem to be taking a softer approach on future interest rate hikes. That helped Wall Street rally. The Aussie dollar's been stuttering higher. It's close to 64.5 US cents. Brent crude prices fell slightly, as did US bond yields. Now, Michael, bond yields, I know You want an explanation? I'll give you one. Thanks for asking. Without going into the detail, Michael, bonds are good places to be in times of uncertainty. They're a defensive investment. So given the Middle East crisis, investors are buying bonds. When you buy something, it pushes up the price. That reduces the return you get, i.e. it reduces the yield. When you have lower bond yields, if you've been listening the last couple of weeks, you'll know this bit, Michael. When you have lower bond yields, that makes them relatively less attractive to equities. So equities tend to rise when bond yields tend to fall. There you go. Lesson done.
Thank you, Sean, and thank you. You saw me take a mouthful of tea just as you got to that, and you decided to go on your own on bonds. And this is the first time I've ever heard you say the words without going into detail. I've never heard you exercise restraint on bonds before.
Right, and then I did go into detail. The thing was, though, you were having a sip of tea, so I was like, it was free for all for me.
Yeah,
you couldn't interrupt.
No, I couldn't, and so you just decided to make the most of it and give me another lesson in bonds, and I appreciate it. All right, there's a bit to get through. We'll be back in a moment with the rest of the day's business news. Sean, households spend more of their income on mortgage repayments than ever before, and according to the Reserve Bank, it's about to get worse.
Yes, mortgage payments have risen to about 10% of disposable income from 7% when the Reserve Bank began lifting rates. Now, that 10% number refers to all households, including people without a loan. So focus less on the actual number and more on the fact that it's gone from 7 to 10. What's that? About a 40% jump. That is huge. Reserve Bank Assistant Governor Chris Kent yesterday said rising home loan repayments was slowing household spending and helping get inflation back to target. The higher rates mean people can't borrow as much. They're also impacting the Aussie dollar, he said. Put all that together and you have higher interest rates working to slow inflation. That's actually the good news. That's what they're supposed to do. But you also have people stuffing up records amount to pay off their mortgages. Another interesting fact out of yesterday's chat, early last year, about 40% of mortgages were fixed. Well, it's now about 20%. Remember we talk about the so-called mortgage cliff? About half of that cliff has happened. Don't know how that works, but and the economy hasn't collapsed yet. So maybe that's good news.
And just quickly, Sean, before we leave mortgages, the International Monetary Fund says that Australians pay a greater share of their income to mortgage repayments than any other advanced economy.
It looked at debt servicing nations, and basically Australians come in at number 1, followed by Canada, Norway, and the Netherlands. At the bottom of the list are France, Portugal, Spain, and Italy. Germany's in there as well. Now, Michael, France, Portugal, Spain, and Italy, as it turns out, I visited them recently, or many of them.
Oh, what a coincidence that this story has made it into the...
It is.
Yeah, go on.
Well, they've got this wonderful cafe culture, right? Where you go and you sit and you have a cup of coffee and something to eat. And I just reckon that's a much better way to spend your money than on the mortgage.
Yes. And I think if most people had the choice, they probably would prefer to do that as well.
I don't know where they live or, where they can afford. I mean, obviously they rent.
Yeah. And maybe that's the key to it.
We should all rent. Maybe.
God, we're taking a veering off in an odd direction based on your own experience visiting some of these countries and enjoying a nice little cafe break.
Well, there is some truth to this, and this has been a bit of talk here in Australia. So if the big super funds owned apartment blocks, for example, rather than individuals owning them, what they do is have really long-term leases. So you might have a 20-year lease on an apartment block and you just pay rent. And in Europe, there are lots of big insurance companies, for example, in Switzerland, own the apartment buildings, and people just have really long-term leases. And that's, they never actually own a home in all their life, but they just know that their rent's going to be whatever, and that's how it runs.
Yeah, it's worth actually having a listen to Scott Langford, today's interview, because he really is talking about some of these options of getting institutional investors involved in community and affordable housing. It is, a great opportunity for another plug of the interview, but it is worth sticking around for.
Definitely.
Now, Sean, moving on, the chair of Qantas, Richard Goyder, will step down.
Michael, beautiful. Moving on, the chair of Qantas, Richard Goyder, will step down. I like that.
Yes, and it was entirely deliberate, can you tell? Bowing to pressure, really, a fair amount of pressure from shareholders after a fairly turbulent few months, Sean, of criticism about the airline's performance.
Yes, now Goyder is a blue chip director. As blue chip as they come, he's chair of Woodside Energy. He sits on the AFL Commission. He used to run Wesfarmers. You don't get much more blue chip than that. Yesterday, he acknowledged that the national carrier hadn't done well enough and said he'll step down after next year's AGM. Yep, in 13 months' time. What that does do is allow some continuity at the very top of Qantas. Remember, it has a new CEO in Vanessa Hudson. Having a chair leave at the same time may not be the best idea for shareholders, at least. It will also take some of the heat out of this year's AGM, scheduled in about 4 weeks' time. But there's already been criticism that Goyder isn't going sooner. Now, 3 other Qantas directors also announced their retirement yesterday. That's going to happen over the next few months. Qantas' share price yesterday ended up 2.7%. That's a pretty good whack.
Blue chip. Where does the name come from?
What a great question. I have absolutely no idea.
You know, I'm the fastest Googler.
I am too.
Well, okay, a blue chip share is a company that's considered top best.
That's the
like
top.
a casino's most expensive chips, which are blue.
Is that right?
Yeah, so the first part was just the preamble and the second part was the useful part. Apparently, the blue chips, I mean, I have never actually seen a blue chip in a casino. It probably tells you about my budget if I ever go into a casino that I'm never actually nudging the blue chips. But isn't that interesting?
It is very interesting. I didn't know that.
Yeah, we have both learnt something today, Sean. The Commonwealth Bank held its AGM yesterday and the bank's support for the voice referendum stirred up some shareholders.
Commonwealth Bank Chair Paul O'Malley said a $2 million contribution to the Yes campaign for a voice to Parliament is consistent with the bank's values. He said the board saw the voice as a policy issue and the decision is consistent with Commonwealth Bank's long-term support of Indigenous communities. According to the Financial Review, there were about 200 shareholders at the AGM in the International Convention Centre. Others asked about the ethics of artificial intelligence, offshoring of jobs to India, and whether the board was comfortable having PwC as its auditor following its tax scandal. Meanwhile, boss Matt Commons spoke to shareholders as well. He spoke more about the economy. He's pretty optimistic about the economic outlook all in all.
Yeah, and Sean, Telstra plans to buy cloud consulting company Versent for $267.5 million to support growth and the digitisation of businesses.
Not actually a really big purchase for Telstra, but an interesting one. It's supposed to occur in the next 6 weeks or so. Now, Versent is a cloud computing consulting company. Basically, it connects big companies to cloud technology players, Microsoft, Amazon Web Services, that type. The new business includes 500 employees. It's going to be part of Telstra Purple. Now, that's Telstra's tech services and consulting arm. It's a fairly new business and obviously a growing business. So it'll just be interesting to see how things go.
Yeah, it certainly will be. Now, once a golden child, I suppose you'd say, of the share market, Sean, CSL has had a bit of a rough time of it in recent months. But yesterday, Chair Brian McNamee said the blood plasma group remains a growth stock.
He also said no one likes seeing the group's share price fall. Really? I mean, it is down 18% since late June. At CSL's annual general meeting yesterday, 23% of shareholders voted against the executive pay report. That's quite a chunk. The new CEO, Paul McKenzie, could make close to 11 or 12 million Aussie dollars this year if he meets performance hurdles. Dr. McNamee, the chair, said that interest rates have grown much faster internationally than anyone anticipated, and that affects the cost of capital and share prices. And I quote, "I can't fix the macroeconomic challenges. All we can do is run a good business." Fair enough. He also said CSL is never going to be a dividend stock.
A rise in costs has hit insurer IAG in part because inflation has pushed up the costs of repairing car damage.
It means profit margins will be at the lower end of expectations. It's the third time in a year that earnings expectations at IAG, one of Australia's biggest insurers with brands like NRMA, have been lowered because of unanticipated shocks. IAG told investors at its annual general meeting that it expects a stronger second half as we benefit from the earn-through of pricing. That basically means higher premiums. Notwithstanding, insurers have already pushed through double-digit premium price increases this year. In fact, I think IAG pushed through like 15 to 20% increase in premiums. Well, there's more on the way. IAG also said that the level of wild weather this year has so far been relatively benign.
Sean, Bank of Queensland's net annual profit tumbled 70%, way below expectations as it battles higher costs, the prudential regulator, and a very competitive lending market.
Bank of Queensland also slashed its dividend, and yesterday the share price fell more than 7%. It ends a rough year for the bank. Of course, it got rid of its former CEO, George Frazers, and faced pressure from the anti-money laundering regulator. Now, 2 weeks ago, former chair and the new CEO, Patrick Allaway, said the bank would cut 250 jobs. He also revealed a $79 million hit to its profits in the last financial year. Bank of Queensland also took a $200 million impairment to its goodwill in the financial year. Very, very rough 12 months.
Finally, Sean, the Albanese government is moving to regulate Apple Pay, Google Pay and other new digital payment services by expanding the Reserve Bank's powers, with draft legislation released yesterday.
The bill will allow the Reserve Bank to regulate digital wallet providers in the same way as credit card networks and other types of transactions, according to the Financial Review. The Treasurer will also get a new designation power to order regulatory oversight in the national interest. The government said this will address risks posed by new digital payment services, which are currently unregulated, to protect consumers, promote competition and spur innovation. Now, the laws could allow the Reserve Bank to regulate pricing, access rules and request data from the technology companies. I can't imagine Apple will be very happy with this one, though I'm sure the Commonwealth Bank is.
Now, in international news, Sean, we mentioned this one the other day, but now it seems a little bit closer to coming to fruition. ExxonMobil is close to a $58 billion deal to buy Pioneer Natural Resources.
And that's not far off 100 billion Aussie dollars, and it would easily be the biggest deal of the year. It also shows that Exxon is pretty confident that oil and gas, which is what Pioneer Natural Resources does, will remain central to the world's energy mix for decades, no matter what path nations take towards a low-carbon future. It's Exxon's biggest acquisition since merging with Mobil. That was back in 1999. Big strategic bets with the potential to shape the future of the world's energy system have pretty strong precedent in Exxon. It's done them throughout its 140-year history, survived wars, nationalisation, plenty of criticism. Anyway, I reckon we'll get the deal done.
And finally, Sean, the Swedish city of Stockholm plans to ban petrol and diesel cars in part of the city starting in 2025. That's, just over a year away now, in a bid to crack down on pollution.
Yeah, really interesting. In an area of about 20 blocks that straddles the Swedish capital's finance area and main shopping drags, will only allow electric cars, some hybrid trucks and fuel cell vehicles, according to rules to be presented overnight and reported by Bloomberg. Can you imagine all those trucks moving into the retail area, unloading, and they have to be hybrid?
Wow, that is a big change.
It's a massive change. An expansion of the zone could be decided in the first half of 2025. Stockholm could be the first major capital to introduce a wide prohibition on internal combustion engines. It goes further than plans by Paris, Athens and Madrid to ban diesel cars. Other cities, including London, have already introduced low emission zones. They include daily fees for entering the city centre in those older combustion engines. No one has actually banned them yet, so this is really interesting to watch.
All right, up next is the interview we've mentioned a couple of times now with Scott Langford, Group CEO of St George Community Housing.
All about affordable housing. You must listen to it.
Indeed, and St George Community Housing is a supporter of Fear and Greed. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It is Thursday, the 12th of October, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.